Yo, what's up you guys? Welcome back to another video, and today we're gonna do the usual weekly market breakdown. We will look at the market from both a technical and a fundamental perspective. But before we get there, I just want to go through some of the questions that we have received on the last couple of videos that was dropped. So let's go through. I think yeah, there is some sell liquidity on DXY, so we can expect it to go lower before continuing in the high time frame. Bullish bias, great breakdown, brother. Thank you very much. No one can do that. That is correct. Nobody can do that. But the thing is, it's easy to make people believe that it is possible. Mustafa Nain's 10,000 subs, you can have a strategy for free that you can apply the rules of your strategy. Guys, like I said before, if we hit 10,000 subs, I will drop this strategy that I use in the markets every day. Then I do see there's a lot of people that are watching the content who is not subscribed. I would tell you right now, hit that subscribe button, because we're like 600 subs away from hitting 10,000. Odin, probably the best reaction. You're a legend, man. Your videos are inspiring and more than just informative. It's really life-changing. I am happy to hear that. FX coach, FX dogs, FX fraud, they call themselves all of these names. This is a slow and steady business, or else you will be the gift that keeps on giving. Thanks, buddy. You spoiled our Lamborghini dreams. Love your content, love your work. Thank you so much. Guys, think about it this way. I've been doing this trading thing for just over 10 years. I don't have a mention. I don't have a Lamborghini. I don't have a Rolex. This is an Apple Watch which isn't even charged. It's dead. I'll probably have to charge it. But it's not even the latest ones. So don't think this is easy. I'm not wearing Gucci and Gucci. I'm wearing the same cap in every video that I make. So don't think that you're going to become overnight millionaires, because that's not how it works. The only way it works is to portray a lifestyle that you don't have, to make people believe that you actually making all of this money through trading, but that's not really the case. ETM Pana is saying, can you break down USD JPY in the next video for shizzle? My nizzle product shizzle. We can add that to the watch list here as well. This market hasn't even moved since the last time I spoke, but so we might have a weaker dollar. No, so I'll tell you how it works. So when there is concerns of interest rates that are going up, you can more it's just highly likely that the dollar will increase in value, because investors are like these guys that sells courses, right? They always look for the best place to put their money into. So if they can put their money into a fancy hotel to make you believe they can trade, and that's what they're going to do, then that's what happens with the dollar. If the dollar increases, if the Feds talk about hiking interest rates, this will attract investors to come and invest in the dollar, because their returns that they held on the money that they've invested will be higher. So that will boost the economy, the US economy in certain sectors. Jerome Powell doesn't want to give a clear statement. He's just beating around the bush, and that is something I've said many times. You change a lot of people, they change the market up and down, because that's how the economic data comes out. It just, which is why it's very difficult to actually sometimes trade in the market, because there's not always good opportunity, because you don't know exactly what the next possible move is going to be. What do we have here? Osamo is saying, I blame the ongoing geopolitical risks event for all of this. 100% correct. And I think a lot of people have probably been wondering, but if you have been looking at the dollar index and gold, basically, you'll see that they both have been very bullish. Now, gold is normally tend to be negatively correlated with the index, but the thing is, during times of uncertainty, like we have now with the war that's going on, people tend to invest into gold, because gold is seen as a safe haven. And what a safe haven is a currency or a metal that doesn't lose its value over time, like the Swiss franc. So they're more likely to put their money in there just so that it can be safe. Amokeleni is saying, thank you much for the educated Mr. Jack for this beautiful educational video. Okay guys, if you have any questions, please drop them down in the comment section below, and don't forget, 10,000 subs, you'll be hearing about the way I trade in a full video. Now, firstly, we are going to look at some news events that came through last week. We had the Empire State Manufacturing Index. We had some retail sales that came through. We had some core retail sales that came through. We had the unemployment claims, and we had Powell speaking yesterday. Also, and I've covered that in the video that I've made yesterday. If you want to learn more about how this works, just go check out the video that I have done yesterday. This week we've got some PMI, flash services PMI for both the services and the manufacturing side. We've got Jerome Powell once again coming to address the nation. We got some advanced GDP, which is a gross domestic product, QQ, which is quarter over quarter, and then we've got some more unemployment claims, which basically gives us an indication of how many people had lost their job within a given in time, and that means that they filed for unemployment benefits. We've got the core PCE price index, and we've got the revised University of Michigan consumer sentiment, where consumers basically give us an indication of how well they're concerned about the market. I will, however, work with these news again. I'm still very bullish right now on the index, but the index hasn't given us a clear direction. Now, I always say that you have to always be reactive and never be too predictive. And the way to be reactive is that you always want to follow the structure of the market. At the moment, we are currently trading sideways, as you can see. And even if I say today, guys, I do anticipate the market to continue lower to potentially complete this information. If the market tomorrow or Monday breaks above this level, that means you now have to adapt to the market, and that means that we're just gonna go that way then. Although I say it like this, because one thing I do find is that a lot of people, especially the ones who doesn't have enough trading experience, is always expecting something to go exactly as anticipated. Now, as much as I want to be correct when I do these breakdowns, because it gives me some sort of pleasure knowing that I was able to help some people make some funds in the market using these analysis as a guideline, it's always important that you use initiative as well. So we're going to go straight with the weekly time frame, and then we're going to go work our way down. Now, once again, and this is exactly why I'm still bullish on the index, there's still a lot of room to the upside. Firstly, if we look left, you can see we have this very important structure that the market is still holding on. And we also have this level that I would like to see the market come in clear first before seeing any moves down. I've also spoken about the risk trend line that was broken and the reasons why we expect this market to definitely continue higher, but that's obviously for the big guys, the big guns, right? So what we have over here is we've got a market that had broken above this strong level of resistance, right? Once resistance gets broken, it becomes support. We had that pullback there, and again, I expect this continuation to take place, and it's going to be a slow move, but eventually it's going to have to happen at some point. So if you remove that, let me just take this away for you guys very quickly. Now, if you go down on the daily time frame, we can also see that the market has been holding on to this level very strongly. You can see here we had support, got broken, it became resistance, the resistance got broken, it became support, and it got tested multiple times, right? Now, like I said before, I would love to see this market continue higher, because there's some signs and indications, especially with what Powell had said, to continue higher. However, if we do get a move lower here, then this is probably how far low I would see this market go before continuing higher. But you obviously, again, need to apply the rules of the strategy that you use, because this is simple. You know, this is just a breakdown. And like I said, if we hit 10,000 subs, I will definitely be giving you guys the way I enter the market. Now, next up, we've got the NASDAQ 100. Now, I've made this breakdown. NASDAQ has been melting to the downside, and I still continue this move lower. Now, once we get here, I would then expect a pullback there, and that would complete the neckline to the information over here. Now, after the information, like I said, you always expect to pull back to the neckline, but this pullback to the neckline is quite deep. We have this impulse, so after an impulse you expect a correction, and the best way to measure that is by taking your Fibonacci from the high to the low. Then you can see that we do have the confluence of the 61.8 Fibonacci. It's lining up perfectly, but that is because we are just using this this move here down. But because we're anticipating this market to continue lower, this is basically where I would probably come in and see this market pull back to. So like I said, once again, I do expect this move down, and then from there I'll give you guys another update. Next up, we've got the Dow Jones, also similar price action we got here. I do expect this market also going into the new week to just continue lower, to hit that level. From there we can once again come back and do another breakdown. And if you take the Fibonacci from the high to the low, we also got this 50% pullback that's lining up perfectly with this neckline also of the same formation. But that's going to be a video for another day. Once we hit that level, I'll come back and give you guys another update. Next up, we've got gold's been very bullish. You can see the markets has failed to actually break and close above this level over here on Friday. Now we also have a very important structure to the left. If you take the Fibonacci from the low to the high of this impulse over here, you can see that we do have the 61.8 that's also lining up perfectly with this previous level of resistance that got now this resistance level over here. It got broken and it's now turned support. So I do expect, or I would like to see this market at least pull back to this level going into the new week. So I will definitely be looking for selling opportunities in this market, obviously provided that the rules are satisfied that I do use to enter into the market. Next up, we've got the S&P 500. Now again, same thing over here as the NASDAQ. Again, I expect a slightly lower pullback till there, and then obviously would like to see a pullback. But then again, like I said, I'll give you guys another update on the market. Next up, we've got USD JPY. Again, this market had not been moving since the last time I spoke about this, and like I said before, I need a clear breaker structure before making a trading decision over here. So I would say let's wait for a clear break, either to the upside or to the downside. And remember, in order for USD JPY to go up, the Japan yen needs to weaken and the dollar needs to strengthen. If they're both strong, they're going nowhere. So I can't come in here and say that because DXY is going to get stronger, I expect this to happen. Even if DXY gets stronger, but if the yen is also strong, then this market's going to go nowhere. So I need a weaker yen and a strong dollar before this market's going anywhere. It can go a weaker dollar and a strong yen, and then we anticipate this move to the downside. For now, I don't see anything happening here until we get a clear breaker structure. Guys, that is it from my side. I will be back with another video. Any page you need me to drop for you, please let me know down in the comment section below. Thank you for your time. And as always, there is just one I forgot to add, which is the GER30. No, not this one. Here we go. The GER30. Yeah, this market also, you can still follow this analysis. You can see once again I was spot on with this. So again, I consider that break, a retest, and now definitely this move down. So this will basically just be like that. So you can just use it like that. There we go. Okay, again, thank you for your time, and as always, have a good weekend, stay safe, and remember, cheers for years.